What happens when you just stop? You lock the doors of your shop, unplug the servers, cancel your subscriptions, and you just walk away. Is your business legally dead? Well, the terrifying answer for many Arizona LLC owners is absolutely not. Welcome to this explainer. Today, we're tearing down exactly how to properly dissolve an LLC in the state of Arizona. Because, let me tell you, just walking away? That's not a strategy, that's a ticking time bomb.
A padlocked door feels pretty final, right? I mean, it looks closed. But here's the thing. The state of Arizona doesn't have a camera on your front door. If you stop operations, but you never actually file the required dissolution paperwork with the state, your business is still legally active. That means the taxman, state compliance officers, and potential creditors, they still see you as a wide-open target. Failing to properly close your LLC leaves you incredibly vulnerable to mounting fees and some serious legal dangers.
So, the crucial point is, doing nothing turns your business into what we call a zombie LLC. It's dead to you, sure, but it is very much alive on the state's books. And a zombie LLC is incredibly dangerous. Neglecting the formal process risks massive fees, you could actually lose your personal liability protection, and you even open yourself up to fraud. But don't worry, we're going to fix that today.
Here is our structured roadmap right out of the danger zone. 1. The hidden risks. 2. Preparation and the vote. 3. Winding up in debts. 4. Handling taxes. 5. Filing articles. And finally, 6. Wrap-up.
Okay, let's dive into this. Section 1. The hidden risks of neglect. Why walking away is dangerous. If you just walk away, you are eventually going to face administrative dissolution. This is basically when the state of Arizona gets tired of you ignoring your compliance, failing to maintain a statutory agent, ignoring fees, and they literally force your business to close. But please, don't mistake this for a free out. Being forcibly closed by the state is a massive red flag.
When the state administratively dissolves your LLC, the fallout is severe. First off, that corporate shield protecting your personal bank account, it can just vanish. Second, after 6 months, your business name is forfeited right back to the public. Third, you're still on the hook for unpaid taxes and penalties that piled up while you were ignoring things. But honestly, the most terrifying risk? Fraud. Bad actors actively monitor dormant LLCs. Because the state doesn't deeply investigate reinstatement filings, a scammer could literally reinstate your zombie LLC and use your clean business history to open fraudulent credit lines. You have to take control and close it yourself.
Section 2. Preparation and the vote. Starting the legal process.
To start the legal process from the inside out, let's bust some legal jargon that trips a lot of beginners up. In Arizona, dissolution and termination actually mean two entirely different things for an LLC. Dissolution is the internal decision by you and your members to close the business. Think of it as the starting line. Termination, on the other hand, is the final state filing that officially ends the LLC's legal existence. That's your finish line.
To get to that starting line, you need a vote. If you have an operating agreement, follow exactly what it says about voting to dissolve. If you don't have one, Arizona law steps in and requires a majority vote of the members. Now keep in mind, majority interest isn't just a head count. If one person owns 70% of the LLC and the other owns 30%, the 70% owner holds the majority. Regardless of how the vote goes down, you absolutely must document this decision in writing. Keep a signed resolution or meeting minutes. You want a rock-solid paper trail if a creditor or tax agency ever comes knocking.
And this brilliantly illustrates our next point. Section 3. Winding up and debts. The creditor first rule. Once the vote is passed, the business goes into an operational phase called winding up. And listen, the winding up sequence is not a suggestion. It is the absolute law. Step 1. Pay your creditors. Step 2. Resolve any pending claims or lawsuits. Step 3. Only then do you distribute any remaining assets to the LLC members. If you mix up this exact order, you are walking into a legal minefield.
According to Arizona Revised Statutes 29-3702, an LLC must discharge its debts and obligations. Why does this matter to you personally? Well, because if you skip the creditors and just distribute the remaining business cash to yourself and your partners, the law says those creditors can come after you personally for the amount you took out. You lose your LLC protection the exact moment you distribute assets before settling your debts. So always pay the creditors first.
Moving on to Section 4, Handling Taxes and Accounts, Severing Ties with AZDOR.
With debt settled, we move to severing ties with the Arizona Department of Revenue, or AZDOR. This is where a lot of ongoing penalties stem from, if you don't do it right. I want to preemptively answer one of the most common, confusing questions out there. Do you need a tax clearance certificate to close? Well, if you're an Arizona corporation, yes, you absolutely must get a tax clearance certificate from AZDOR before the state will let you dissolve. But if you are an Arizona LLC, you do not statutorily require this certificate to file your termination. Knowing this distinction is going to save you weeks of stress and confusion.
However, just because an LLC doesn't need the formal clearance certificate doesn't mean you can just ignore the taxman. You still must formally close your accounts. You need to close your Transaction Privilege Tax, or TPT license, and file a final TPT return. If you had employees, close your employer withholding account. And of course, you absolutely must file your final income tax returns with both the IRS and the state, clearly marking the checkbox that says Final Return. If these accounts stay open, the state assumes you're still making money, and they will start assessing penalties.
Section 5. Filing Articles of Termination. The final state filing.
Now, what's really interesting about the slide is the actual paperwork you'll be dealing with. You voted, you've paid the debts, you've closed the tax accounts. To officially terminate, you will need Form LL020, the Articles of Termination. Remember, corporations file Articles of Dissolution, LLCs file Articles of Termination. You'll state your LLC's name, affirm under penalty of perjury that all properties and assets have been properly distributed, and then you sign it.
And the best part? It is incredibly affordable to do this the right way. The state filing fee to process your Articles of Termination is a mere $35. If you're in a rush, you can pay an additional $35 for expedited processing. For roughly the cost of a decent dinner, you can completely, legally protect your personal assets from future business claims. You have a few ways to submit this $35 form. You can mail it or drop it off in person in Phoenix or Tucson, but standard processing takes about 20 business days. For the most efficient, streamlined experience, we highly recommend filing online through the Arizona Business One-Stop portal. Expedited online filings can sometimes be processed in just a few business days or even hours, depending on the service tier you select.
Let's move to and see how this builds in Section 6, Post-Dissolution and Wrap-Up. Protecting your future.
Your state paperwork is approved, so what's left? Well, the cleanup. Once termination is granted, close your business bank accounts. Do not leave them sitting empty but open. If you had employees, close your account with the Department of Economic Security. You should also write a letter to the IRS in Cincinnati, Ohio, stating your business is closed to formally relinquish your Employer Identification Number, or EIN. Importantly, check if your specific Arizona county requires you to publish a notice of dissolution in a local newspaper, as this can vary. Finally, retain all your business and dissolution records for at least 7 years. If an audit or a late creditor claim ever surfaces, this documentation is your absolute ultimate shield. As we wrap up, please note our evergreen legal disclaimer. The information provided in this explainer is for educational purposes. While straightforward closures can often be handled by the business owner, if you have active lawsuits, unpaid taxes, heavy debt, or disputes with your co-owners, you should absolutely consult with a legal professional or an Arizona attorney for specific advice.
We've covered a lot of ground today, from the real dangers of the zombie LLC to the precise steps of winding up and filing your Articles of Termination. So I'll leave you with this. Your business operations may have stopped, but is your LLC truly dead? What action will you take today to ensure your personal assets are protected tomorrow? Don't just walk away. Take control, do the paperwork, and close it right. Thanks for joining me on this explainer, and I'll catch you next time.